What's happening, crypto enthusiasts? Get ready for a rapid-fire rundown of the news that's shaking the digital asset world. The market is moving at lightning speed, and if you're not plugged in, you're missing out. Today, we're diving deep into the critical accounting strategies for institutional investors navigating the Bitcoin landscape. We'll also break down how political winds, specifically speculation around a major political figure's health, are creating waves of volatility across markets. Plus, we're exploring a groundbreaking development in Bitcoin's own ecosystem. Can new DeFi solutions reignite on-chain activity and secure miner revenue? And finally, we've got major consolidation news in the institutional Bitcoin space that you absolutely need to know about. Stay locked in because this is Bitcoin Bulletin, and you're getting the unfiltered truth, the raw data, and the insights that matter most. Don't go anywhere. Make sure you hit that like button, subscribe, and ring that notification bell so you never miss an update. Navigating the digital gold rush, accounting for Bitcoin's institutional future. This is a critical moment for understanding how the world's largest financial players are integrating Bitcoin into their portfolios. The way institutions account for their Bitcoin holdings isn't just an accounting exercise. It's a fundamental driver of adoption, regulatory clarity, and market stability. Today, we're pulling back the curtain on the legal and strategic implications of Bitcoin treasury, accounting for these major investors. We'll explore the evolving frameworks that allow companies to hold Bitcoin on their balance sheets, the tax implications, and the accounting standards that are being debated and implemented globally. This isn't just about compliance. It's about building the infrastructure for a future where digital assets are as commonplace as traditional securities. We'll delve into the specific challenges and opportunities that arise from treating Bitcoin as a treasury asset, looking at how different jurisdictions are approaching this, and what it means for the broader financial system. Understanding these nuances is key to grasping the true scale of institutional commitment to Bitcoin and the potential impact on its price and accessibility. This deep dive will equip you with the knowledge to understand the sophisticated strategies behind institutional Bitcoin adoption. But that's not all. The market doesn't just react to financial strategies. It's also swayed by the unpredictable currents of global politics. Stick around as we analyze how political uncertainty is directly impacting Bitcoin's price action. Political tremors, Bitcoin's resilience amidst health speculation. In the fast-paced world of digital assets, even whispers of political uncertainty can send shockwaves through the market. Today, we're dissecting a pivotal moment where speculation surrounding the health of a major political figure triggered significant volatility across global markets, and critically, how Bitcoin responded. This isn't just about a fleeting price dip or spike. It's a crucial case study in Bitcoin's emerging role as a potential safe haven, or, conversely, its susceptibility to macroeconomic and geopolitical events. We'll analyze the immediate market reactions, tracing the flow of capital and sentiment as news broke. What did the trading volumes, derivatives markets, and on-chain data reveal about investor behavior during this period of heightened uncertainty? We'll explore whether Bitcoin acted as a hedge against traditional market instability, or if it was swept up in the broader risk-off sentiment. Furthermore, we'll examine the long-term implications of such events for Bitcoin's narrative and its place in a diversified investment strategy. Understanding these dynamics is essential for anyone looking to navigate the complex interplay between global politics and the cryptocurrency landscape. This analysis will provide clarity on how external events shape the digital asset market. Now, while global events capture headlines, the real innovation often happens within the blockchain itself. We're about to explore a fascinating development that could redefine Bitcoin's utility and profitability. The BTCfi revolution. Can Bitcoin DeFi revive miner revenue? The landscape of Bitcoin is undergoing a seismic shift, and it all centers around a critical question. Can decentralized finance, or DeFi, on the Bitcoin network itself solve the growing problem of declining transaction fees and ensure the long-term security of the blockchain? Transaction fees, a vital component of miner revenue, have seen a dramatic drop, with over 15% of blocks recently mined with minimal or no fees at all. This trend, exacerbated by reduced on-chain activity and the migration of some functions to Layer 2 solutions and ETFs poses a significant challenge to the sustainability of Bitcoin mining, especially after the recent halving cut block rewards. Enter BTCfi, or Bitcoin Native DeFi. Unlike DeFi on other blockchains, BTCfi aims to build financial applications like lending, trading, and yield generation by directly utilizing the Bitcoin network. Every transaction within these protocols generates fees, directly contributing to the revenue stream that incentivizes miners. The potential here is enormous. Total value locked, TVL, in Bitcoin DeFi has already exploded, surging by 2,000% to reach $6.5 billion, indicating a strong appetite for these new financial primitives. If Bitcoin DeFi adoption can even partially mirror the success seen on networks like Ethereum, it could unlock hundreds of billions in TVL, fundamentally changing the economic model of Bitcoin. This evolution from a simple store of value to a foundational layer for complex financial systems is being powered by innovative infrastructure, including hybrid chains and sidechains, enabling programmatic use of Bitcoin. Crucially, institutional investors are taking notice, with a significant majority planning to increase their crypto holdings and showing interest in DeFi. The trust-minimized nature of Bitcoin DeFi, built on the bedrock of Bitcoin's security, presents a compelling case for wider adoption, potentially revitalizing the network's fee market and securing its future. But innovation isn't confined to protocol upgrades. It's also happening through strategic business moves. We're heading into a major consolidation story in the institutional Bitcoin space. Gryphon and American Bitcoin merge, a power play in institutional exposure. The institutional Bitcoin landscape is buzzing with the news of a significant strategic merger. Gryphon Digital Mining and American Bitcoin have joined forces, creating a formidable entity poised to offer enhanced institutional-grade Bitcoin mining and digital asset solutions. This high-conviction play signals a major consolidation trend within the sector, as companies seek scale, efficiency, and a stronger market position to attract institutional capital. We'll delve into the intricate details of this merger, examining the combined strengths, operational synergies, and the strategic vision behind this powerful alliance. What does this mean for Gryphon's specialized focus on sustainable energy in Bitcoin mining, and how will American Bitcoin's existing infrastructure and client base complement these efforts? The combined entity aims to leverage its enhanced operational footprint and technological capabilities to capitalize on the growing institutional demand for secure, reliable, and potentially ESG-conscious Bitcoin exposure. This move is more than just a combination of assets. It's a strategic maneuver to streamline operations, reduce costs, and present a more unified and compelling offering to sophisticated investors looking to gain exposure to Bitcoin through mining. We'll explore the potential impact on the hash rate, operational efficiency, and the competitive dynamics within the institutional mining sphere. Understanding this merger is key to grasping the evolving strategies of major players in the Bitcoin ecosystem as they prepare for increased institutional inflows and a maturing market. Now that we've covered the biggest stories, let's do a quick recap and tell you how to stay connected. And that's a wrap. We saw how institutions are tackling Bitcoin accounting, how political speculation impacts crypto, the rise of BTCfi to boost miner revenue, and a massive merger in institutional Bitcoin mining. What a day! Don't miss out on any of these crucial updates. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all our social channels for even more insights. We'll see you on the next one.